This is Strategic Hedging with Options and Futures, the E-mini Russell 2000 Futures Contract /RTY. The E-mini Russell 2000 Futures Contract, symbol /RTY, was introduced in 2001 by the CME Group. The Russell 2000 Index is made up of approximately 2,000 small-cap U.S. companies. It's widely viewed as a benchmark for the performance of smaller businesses and often moves differently than large-cap indices. RTY was designed to give traders access to small-cap market exposure. The tick size for the E-mini Russell 2000 futures contract is 0.10 index points. In order to figure out how many ticks are in 1 point, we take 1 divided by 0.10 and we get 10. The tick value for the contract is $5, so 1 full point is 5 times 10, which is equal to $50, and that's the contract multiplier. We calculate the contract size or notional value by taking the contract multiplier of $50 and multiplying that times the value of the futures contract. Another way to think about notional value is to recognize that 1 RTY futures contract is equal to 500 shares of IWM. So let's hop into the Thinkorswim trading platform here to calculate the contract size, otherwise known as the notional value, given today's prices. We're going to take the current price of the futures contract and multiply that times 50 in order to get the size of the contract, which is equal to $120,620. Now, if I want to compare this to how many shares of IWM I would have to buy in order to match that notional value, I would take that value and divide that by the share price of IWM, which is currently $239 and roughly 94 cents. And there we get 502 shares. So 500 shares is roughly equivalent to 1 RTY futures contract. The E-mini Russell 2000 futures contract trades nearly 24 hours a day, Sunday to Friday, 5 p.m. to 4 p.m. Central Time, with maintenance breaks between 4 p.m. and 5 p.m. We can see here that this contract expires quarterly in March, June, September, and December, and most trading activity concentrates in the front month contract. To place a futures trade, I only need to put up the required trading margin, which is much less than the full contract value. Margin is the amount of money a trader must deposit in order to open and maintain a futures position. There are 3 types of margin: initial margin, maintenance margin, and overnight margin. Initial margin is the amount required to open a position, while maintenance margin is the minimum balance required to keep the position open, and if the account falls below this level, a margin call occurs. And some brokers have separate, often higher requirements for holding futures overnight, and this is called overnight margin. You always want to confirm requirements with your specific broker. So let's take a look at what the current margin requirements are in order to trade 1 contract of /RTY. I have the trade tab selected and I've highlighted the futures area in the software. And we can see here that the initial margin requirement to enter into a position in RTY is $12,000. So what are the advantages of trading the E-mini Russell 2000 futures? Well, first is leverage. You can control large notional value with a relatively small amount of margin. And next would be tax efficiency. In the U.S., there's a 60/40 capital gains treatment via Section 1256 in the tax code. And if you have any questions about this, contact your tax professional. And finally, extended trading hours for global news events and hedging. RTY can be an instrument for portfolio hedging. A word about risk management. Risk management is crucial when trading futures due to the leverage involved. You want to be cognizant of position sizing, look into using stop loss orders, and you definitely want market awareness when entering into these positions. In summary, the E-mini Russell 2000 futures contract provides a tool for traders and investors looking to participate in or hedge small cap exposure. With significant leverage, tax efficiency, and extended hours, /RTY offers opportunities for both active traders and long-term portfolio managers. If you're new to futures or have a small retail-sized portfolio, consider using the micro E-mini Russell 2000 before stepping up to the larger contract /RTY. This video is for educational purposes only and does not constitute investment, financial, or trading advice. No recommendations to buy or sell securities are being made. All examples are hypothetical and for illustration only. All investments carry risk, including the possible loss of principal. Options trading involves significant risk and is not suitable for all investors. Past performance is not indicative of future results. Consult a qualified financial advisor before implementing any strategy and review your financial situation, risk tolerance, cost, fees, and tax implications. Options trading requires broker approval, and not all strategies are permitted in all account types. Returns shown are hypothetical and not guaranteed. Market conditions may change quickly, and results will vary based on market performance, timing, and execution. Read characteristics and risks of standardized options from your broker or at www.optionsclearing.com before trading options.